September was a very buyer-friendly month, and it looks like things may continue that way heading into October. Here's your Toronto real estate market update. The core of Toronto had 934 sales. That's up 2.6% from August and up 6% compared to last September, but I'm not impressed by either of those numbers, as we should see a bump from August, and last September was slow because of rate hikes. For new listings, there were 4,028 new properties hitting the market. This is a jump of 67% from August and 53% from last September. A 67% increase in new listings is really big. It's the largest August to September jump we've seen in the past 6 years. We did get a 65% increase in 2018, but there were also much more sales happening at that time. And the 4,028 new listings is the biggest monthly total we've seen since May of 2021, but there were more than double the number of sales happening in that month back then. So we're seeing relatively low sale numbers compared to the number of new properties hitting the market, to the point where the sales to new listing ratio is 23%, by far the lowest number going back 6 years. Which leads us to the available inventory for Toronto's core, which was 4,418 properties at the end of September. This is the highest number since October of 2020 and is the third highest amount in the past 6 years. So you've got relatively low sales, a lot of new listings, leading to quite a bit of available properties on the market, which puts Toronto's core officially in a balanced market, something that's only happened one other time in the past 6 years. We saw very similar trends in Scarborough, Etobicoke, and North York, although sales were actually down 10% compared to August, which is a fairly significant decline, something that doesn't happen terribly often. New listings were up 40% from last month, and total active inventory increased by 32%. So again, we see sales numbers staying relatively low, while a healthy number of new listings hit the market, causing inventory to build. A large amount of inventory means that buyers have more choices, and with fewer buyers in the market, these two circumstances lead to downward pressure on prices. In last month's video, I took a look at what I thought the pace of new listings would look like for the month of September, and at the time of filming that video, the pace looked to be about 3,300 homes in the core. The fact that we ended up with a little over 4,000 means that the pace quickened as the month went on. This lines up with what I said about homeowners holding off until anticipated better market conditions come in September, but buyer activity just hasn't been there for the fall market to get off to a strong start. Combine that with the fact that it seems many condo investors are listing their properties for sale. The downtown core has quite a bit of condo inventory, and it has been reported that many investors are seeing their cash flow hurt by high rates and rent control. So it'll be interesting to see whether these financial circumstances are the catalyst to making condos much more affordable for the average buyer as prices begin to fall. This means that it is one of the best times we've recently seen to be a buyer, provided the financing and affordability isn't an obstacle, which understandably it would be for many, and is likely why we're seeing relatively few sales. And if you're a seller in this market, then patience is the name of the game. Sellers are used to seeing competing offers and homes selling for escalating prices in fairly short time frames, but now sellers will need to negotiate a bit and likely offer some concessions to buyers as well. I'm Harnish, Toronto Real Estate Navigator with Bosley Real Estate. I want to thank you so much for watching. I appreciate your time. If you're catching this on YouTube, please like, please subscribe, hit the notification bell so you don't miss any upcoming content.